Very good morning, friends. Let's start with a new topic that is called reconciliation. Among the easiest topic, simplest one, and yes, marks are up for grab. First, what is reconciliation? The word reconciliation is not new for you guys, that is for sure thing. In CPD or in foundation level, you have done one reconciliation, and that is bank reconciliation statement. You know, when there used to be a difference between balance as per cash book and balance as per passbook, then you had to reconcile them. On the same lines, what is reconciliation over here in costing? Before I go to the reconciliation, at least you must have clear idea that the need for reconciliation arises when there are two things and which are different. If there is only one, there can never be the need of reconciliation statement. So let's go about first understanding the types of accounting system that we have. By and large, as discussed in costing, we have two kinds of accounting system, finance and costing, and there are two ways of maintaining it. One is integral accounting system, another is non-integral accounting system. Now what happens in integral accounting system? In integral accounting system, the two cost and finance are combined, they are put together. And if they are combined, if there is one books of accounts being maintained, of course you will appreciate there is no need of preparing reconciliation. What is non-integral then? Non-integral is an accounting system wherein finance and cost are kept separate. Two accountants will be there, two books of accounts will be there, two P&L account will be there, and of course the two P&L account will give you two profits, and when there is difference between these two profits, you have to prepare reconciliation statement. You need to prepare bank reconciliation statement when there was difference between balance as per cash book and balance as per passbooks. At that time you were aware that company was maintaining cash book and bank was maintaining passbook in their records. At the end of some period, when you find that your balance as per cash book is different from what bank is showing in its passbook, you used to prepare reconciliation statement. On the very same lines, we understand reconciliation in costing as when there is a difference between profits as shown by financial accounting and profits as shown by cost accounting, we have to prepare a reconciliation statement over here as well.